So typically every month when we share with you the market stats, probably means a whole lot more than nowadays when you see them. Because of COVID-19, our market is so different than in the past. And like I mentioned, when you would see the numbers, median price, original list price to sold price, and just multiple other pieces of data, you'd be able to get a very good idea of the market. But since March 12th, when the NBA season was suspended, at least in South Florida, things have changed tremendously for the real estate market. And our market, it's just very different than it was in the past. In the past, our lower end market, single family homes like 500,000 or less would be selling pretty quickly. As long as the house is in decent shape and it was in a good area, it would sell quickly, sometimes with multiple offers. But that is totally different than what we're seeing now. And so I want to tell you this. So that data that you see, all the stats that are there, just trying to be as transparent as possible. I just did it because it's what I do consistently, share the data with you. But I would just take those numbers with a grain of salt, because right now, boots on ground, basically agent showing properties, the stuff that's selling the best now is stuff from 500,000 to $1 million. Stuff that's over $1 million isn't selling well, and stuff under 500,000 isn't selling well. And the reason that's happening is pretty simple if you really think about it. So properties that are 500,000 or less are not selling really well, because those properties, typically those people need jobs, and it's a job, maybe it's a first home purchase or a property that they're going from selling maybe a condo or townhouse and going into a single family home. And what happens is, because so many people have lost their jobs, that's probably not the first thing that they're looking for. They're just trying to survive. So they're not really looking for homes. So $1 million or more, those homes, those are usually emotional decisions, not decisions where they have to do it. It's more because they want to do it. And a lot of times, at least in South Florida, depending on if it's a condo or a single family home, those could be second, third, or fourth homes or investment properties for the future. So people aren't really that interested in those. So like I mentioned before, the properties that are 500 to $1 million, those are typically people with more stable jobs, at least in this environment. And they may have to move. Maybe it's for school, or maybe it's for something else and trying to get ahead. They have a stable job. They have decent income. They have money in the bank. They're probably more secure. And because of that, because of those things, that market is pretty strong. And when I say strong, it's not strong like it used to be, but it's strong in this market. Because if we look at the numbers, so today is it's April 21st. And on April 21st, the numbers compared to last month are about half down on as far as pending sales, as far as homes closed. And you also have to look at too, in real estate, as far as closed sales, because this happened in the middle of last month, we don't have enough data yet to figure out what's going on with the market. We can just tell you that, it's slower than it was in the past. Banks are being a lot tougher. And while I mentioned banks, there are a couple of banks that are so much more difficult as far as getting qualified and getting a loan. Chase mentioned recently that in order to get a mortgage, you need to have a 700 credit score, and you have to put at least 20% down, where in the past, sometimes you can get away with 5% and your credit score could be much less. Wells Fargo was similar, but they were at 680. I spoke to a mortgage person today, and he mentioned that for FHA loans, his lenders are using 680 or more. If it's less, it's going to be difficult. And they're also doing multiple job verification requests for for employers, because a lot of people unfortunately are losing their jobs. So it makes sense for a lender to do this. So even though I'm talking about the market report for this, I wanted to give you a perspective of what, in my mind, from my 16 years of real estate experience, will happen in the future. Because a lot of these data points are, they're sort of slow. They're a month or two behind what's really happening. So after speaking with a wealth manager, and just mortgage people, other agents, just some of the top people in our industry, what a lot of people are saying, the worst time for a seller is probably going to be in June or July, anywhere the end of May, June, July, somewhere around that time, because that's when the data will sort of catch up. Another thing is, if you're a buyer, that may be a good time to buy, because after that, things will probably, again, this is just guessing, but this is guessing with experience and speaking to other people that have decent knowledge. It would probably, as far as if you're looking for an opportunity to buy, it would probably be June or July or late May. So that little time frame. That after that, I think things will probably start to get better. And as a seller, it would probably be better to sell if you really need to sell. And I'm not trying to convince you to sell or not to sell, but if you really need to sell and you're sort of on the fence, I would recommend selling now rather than getting to that time period, or just wait much longer for that time to, if you end up having to sell in the end of May or after, I'd probably wait a little bit. And I hope this helps you. And if you ever need to get in touch with me, you can go to allinmiami.com. Thanks so much.